The information provided in this podcast is for general information purposes only and should not be considered as personal advice. Always consult with a qualified professional or expert in the relevant field for personalised advice tailored to your specific situation.
I'm a big believer in starting off and formulating your foundations and making them solid before you try and build anything on top of it. And I don't care what it is. If foundations are not solid, I don't care what you build on top. From our point of view, we say, well, Cert 4 is the minimum standard under law. Do it, get in there, spend a couple of years honing your skills and knowing what you're doing and getting that base knowledge really solid, and enjoy what's in front of you and helping people fulfill their dreams. Yeah. With all the stress and tensions that it comes, we spoke about mental health before, but that aside, it's very fulfilling and very rewarding from a career point of view.
Hello, everybody. Welcome to another episode of The Wealth Guide, sponsored by Ryker Capital. My name is Tamara, and I am the practice manager. With me today on the couch, very, very excited, we have Mr. Peter White, CEO of the Finance Broker Association of Australasia, FBAA. Welcome, Peter.
Thanks very much for having us.
Really appreciate you coming. Also on the couch, we have Principal and Senior Advisor of Ryker Capital, Mr. Ray Regmi.
G'day, Tamara. Thank you. Thank you for having me.
And of course, another Senior Advisor from Ryker Capital, Mr. Dean Dasuki. Hi, Dean.
Good. Hey, Tamara. How are you?
Really good. Really good. Very excited, Peter, to have you here. So the FBAA really want to, so we at Ryker Capital do work with a lot of finance brokers, mortgage brokers in our professional relationship. Really, so we're going to have a lot of mortgage brokers tuning in, and I bet a lot of them are going to be members of the association as well. So we're excited about that and kind of drilling into that. We also will have a lot of clients, I think, tuning into the podcast today, Peter, as well. Probably really good for them to understand, what kind of support and how that support system works for the broking industry too, which I think is really important. There was one stat, and is it over 70% of new loans for people that are getting written by mortgage brokers? Is that?
Yeah, Tamara, that's roughly it. It sits a little bit either side of that depending on the market. It doesn't go much above it for now. It will in the future, but it's generally pretty close to that 70% of home loans originated by mortgage brokers.
That is amazing. So I think this is going to be very valuable. Over to you, Peter. If you could just let us know a little bit about your career, because I think you've been the CEO of the FBAA for a little while, maybe a bit about your background.
Yeah, it's been a little while. So technically speaking today, it's managing director.
Sorry.
You can demote me to CEO.
I'm so sorry. Best to set the tone, and my apologies, Peter. I will not be demoting you.
That's fine. So actually, I put a post on LinkedIn yesterday. So yesterday was my 21st year of being with the FBAA in some shape or form or another. So I started in 2003 as state manager or state president, I should say, for New South Wales. And volunteered from 2003 up until 2010. But in 2008, I took over as national president and chairman of the board. And then took over then as CEO in 2010. And then it's been various iterations of titles over time, and it is what it is. So it's been a while, and this is my 45th year of being in industry. So I started when I was 5.
I was going to say, you clearly...
What's the context around that?
You started as a very young person, clearly, Peter.
Very young career. But yeah, it's been a very interesting journey, and obviously a long time in industry, a long time advocating for brokers through the FBAA. But also, I guess it's interesting as you get older, you learn to find those life balances. We were talking a bit earlier about motorbikes and so on. I'm very keen motorcyclist. I was from a teenager, even though my father hated that. He used to call me a temporary Australian. I'm still here, so I've dodged the bullet so far, touch wood. So I like riding big motorbikes. That's my getaway, and we bring that into the association as well. So we have a riders club, but it's that part of a thing that I put in my post yesterday. It's not a job, it's not a career. This is my journey, right? Yeah. And it's my passion, and I treat the industry as my family. So we bring all sorts of things together to be a part of a family and to look after one another, and a lot of that falls into the mental health space. Yeah. So in 2016, I took on the role as awareness ambassador for mental health to the industry, because for the few years prior to that, I was finding all these friends of mine, especially in the corporate world, and my wife at the time, we were all going through depression, all sorts of things, substance abuse. I found lenders were looking at questioning brokers' accreditations. And it became very taboo. Nobody wanted to talk about it. Everyone pushed on the carpet. It's a bit of a thing that we don't talk about. Well, a lot of people didn't realise, even though I'm used to speaking to people, whether it be on camera or whether it be 1,000 audience, whatever it is, I suffer from severe anxieties myself. So I used that as the example and what friends go and took on an advocacy position to help people to understand it happens to everyone. There is support out there, and over the years we've developed our own support program for counselling for members, and we've progressed that conversation a long way. I'm about to take it into another evolutionary step in the coming few weeks to a month to where we've come from and tackle some other broader subjects. But it's really important to understand that life's not always easy. It has certain hoops and roundabouts that you don't expect, and sometimes they smack you right in the face, and you need to be there to support one another. So it's a very important part of the journey.
And we see that with some of the mortgage brokers that we support, the ups and downs that they go through, some of the rough patches that they go through. And ultimately, I'm like, we want to be there as a support system for them, and we always have been. But you're absolutely right, Pete. I'm like, there is a light at the end of the tunnel.
And it's a challenging environment. You'll find that, and even in the advice space as well, there quite often people work on their own out of their homes or in small offices. So there's not like there's a necessarily huge network around them. In one respect, there is, but it's not like they're in
it's an everyday
office
space.
of 50 people, right?
Exactly.
It might be them on their own, or it might be a handful, and they get together every now and then. But it can be very isolating, and it's not just dealing with your own challenges. That's one of the big battles of what you go through self. But when you think of it in the advice space or in the mortgage space, well, they're taking on the impacts of their clients,
correct?
Because they're downloading on them, and they're dealing with all their and when you go through a mortgage process, it's quite often not a straight line. Actually, it's really
and it can be very emotional for clients.
It's the most emotional purchase if they're buying a house. It's a largest debt they get into. It has all the emotions and angst buried into that from the people you're dealing with, let alone looking after yourself. So it's something that is extremely important and very important that we actually support one another through that, because it's not fun at times.
Well, you're right too, because it's really the three factors, isn't it, Peter? It's personal, your personal situation. It's running a business in a structure that's a little bit isolating because it's a smaller business, and then it's the type of work you're doing with all the emotions and the challenges that your clients have in the finance space. So that's a very important aspect of what the FBAA does, and yourself personally as well. In addition to that, and that is very significant, what are the other types of things the association does to support members, Peter?
So one of the large pieces we do is the advocacy, and advocacy covers a broad spectrum of areas. So we do a lot in the media, so whether that be live radio, TV, print, or digital print. So we're there making sure that we're bringing attention to the issues and matters that are important and that concerning the industry, and also making sure that that commentary is beneficial and it's awareness. So people understand that there are mortgage brokers out there. There's finance brokers as well, and it's a bit of a differentiation in today's regulatory environment. So we won't forget them. We are the Finance Brokers Association.
Of course.
But that is the original term for everyone. Just regulation has splintered that a little bit. But finance and mortgage brokers, we're bringing that awareness and attention to the matters that are very important. We back that with a lot of factual research and the commentary we talk about. There's also a lot of opinion basings. I'm not shy to have a comment on something. But then from the media piece, which some of the media reach results we got last year, so at end of June last year, we reached over 250 million people through our media. Then the rest of the advocacy piece sits there and looks at the interactions with the industry, and most importantly, that with politicians and regulators.
I was going to say, are we talking now and diving into the legislation? So I've been dealing at a regulatory front, a political front, since 2008. Right.
And last night, for example, I was at a dinner function with the PM and senior cabinet, and it's one thing to have planned meetings. It's another thing to be in a a more relaxed environment, and being able to achieve some of the conversations that you've been spinning the wheels with some of the staff rather than getting directly to the minister. Although I've known Steve Jones for quite some years now. I was fortunate to know Jim Chalmers from about 2014. And it was nice to catch up with those people in those sort of more relaxed environments. But that engagement is exceptionally important. That gives us credibility, but also positioning from a political environment.
Definitely.
Been there for a long time. Most people come and go. You see a lot of that. And I've had interactions with people that have started off in ASIC, wound up in a minister's office and progressed to another minister's office. And all of a sudden, 5 years later, we've connected on a particular message. And it's like your old mates. So very helpful.
And very helpful. Well, I'm wondering too, do you find, and sorry to interrupt you there, do you find that really it's that necessity of, because you've got a minister, they've got a job to do, but they do need that industry knowledge, you know what I mean, coming so they understand how to shape policy with that knowledge. Do you find that that's an important part of what you do?
Yes, Tamara, it is. But it's also very challenging. I went through a period, I think it was around 2014, 2015, where every 6 months there was a new portfolio minister. Right? And the one thing that doesn't happen, there is no transition of information. So every 6 months I reset to zero and then had to start again. So when I got to the fourth person, we were sitting down having dinner. It was in Melbourne, and
you must have a PowerPoint by now.
Sitting down, having dinner at Melbourne. I just turned to the minister of the day. I won't use that person's name, and I said, "So I'm assuming nothing's been handed on." And he said, "Yep." I said, "Look, there you go. I've had it already with you. But you're off. Gotcha." But it becomes very problematic when that happens. Fortunately, it doesn't happen too often. A lot more stable as we go forward, but it's a real challenge when you've got to go through that. But that's part of the game. And when you're dealing with politics, I quite often refer to it, it's a slow burn. You cannot go into it thinking you're going to get results tomorrow.
Overnight.
There's some conversations we've been having from right back at the beginning of my start there back in 2008 that are still today, although I think now are coming to conclusions. But you've got to be persistent and patient and realise that people change, people move around, but being able to keep carrying that conversation and be consistent. And that's one of the big benefits that I guess we've had from the FBAA's point of view. Because I've been doing it so long, they, from a political regime, doesn't matter where it changed, but the party and the staffers see the consistency, they see the same balance of message. It's not erratic, and hopefully it's well considered. And it gets us a long way.
But it must be frustrating for industry in general, because as the ministers come and go, the members that are hoping that the change would come about has just not occurred.
So we get a lot of that. A lot of people, why? What's happening with this? Why hasn't that happened? Well, you got to understand, right? It's difficult from the outside to understand. When you're inside, you see all the complexities and how to get it. So when we transitioned in the last federal government from Liberal to Labor, that transition process took months. It's not just walking in, having a seat, picking up the phone and keep going. Because they change your email address, they change offices, the offices get reset up. And
it's logistics. And then it's
the logistics is enormous.
Yes.
And I must admit, it was probably one of the first times I saw it in that last election, is the complexities of what happens here. I have a close friend of mine from my early primary school days here in New South Wales, who works in some of the areas there in Parliament, and he and I were just chatting about it, and I just couldn't believe the logistic headache it is. But that's life.
Well, but the good thing is that we do have that advocacy, because it's for the industry. So it's for the people who the finance brokers and mortgage brokers are working in the industry. And then really that trickles down to the end customer as well. So that's the importance.
That is the ultimate goal. It's facing the customer and ensuring that there is best practice and that people's governances and understanding of their obligations under law are well understood and practiced. And when we look at some of the data that comes out today, so we introduced a best interest duty the other year now. ASIC was doing a whole lot of auditing on it, and ASIC stopped auditing because there was nothing of significance to find. And they stopped it to the point, I said, well, I went to them and said, well, how about give us the data on what you found?
Yeah.
Well, we haven't even bothered to collate it.
Well, that's
okay, I'll live with that.
that's interesting, because I actually was going to ask you about, so post-Royal Commission, and there was that compliance overhaul, and best interest duty. Was it then a documentation of advice as well? Did you have to do something like a report?
We always had a positioning statement as to a declaration, like a statement of advice, but we don't give advice in the credit sector. It's credit assistance. So it was a credit assistance document then. But one of the outflows was this best interest duty that came out. Yep. And that's all about putting the client's interest ahead of yours, and then dealing with the mitigation of conflicted remuneration, which really, to me, conflicted rem conversations are a bit of a furphy. Everybody in this world is in a conflicted remuneration position.
Yes.
I have employees who are doing their best to make sure they do the best by me. So they know that they get a pay rise, they get their bonuses, and it's conflicted.
That is conflicted.
There's kind of a bias somewhere.
That's true.
But it's different when you're trying to drive volume regardless of quality.
Right.
That's a conflict, right?
Yep.
But when you look at home loan products and what brokers are doing again, it's why we call it credit assistance, not advice. When you look at what they're doing there, there really isn't any conflicted rem. There used to be, so there was volume-based bonuses.
Yes, correct.
I'm kind of glad to see that go, because that created the wrong behaviour.
It did.
And ignored the outcome of the borrower. Or had the risk of, let me put it that way.
The risk of that, absolutely. So that's
and look, we
done now.
can tout as an industry saying, look, brokers have always done the best thing by the clients. I can recall times when they didn't.
Sure.
And that's a problem with history.
Well, for being here for a while, yes.
But it's why the NCCP came out in 2010, right?
Yes,
so
that's
although
right.
it sits under the 2009 Act for the National Consumer Credit Protection Act, but it flow off from the UCCC, the Uniform Credit Consumer Contracts, I think is the right terminology. But there were problems back then.
Yep.
Right? And it was all throughout the news. You can't ignore it.
And
there were, right? And that was the impetus behind bringing the NCCP out, which originally, by the way, is the Finance Brokers Act. Right?
There you go.
And it wasn't until,
my goodness. Now,
it wasn't until someone like me whinged and carried on, what about the lenders? We eventually got the name changed and broadened it out.
Sure. So I mean, really, so to your view, is really a move in the right direction now. We've got the duty of care that's been soundly embedded in the industry. It's been welcomed. It's been proven out, and it sounds like with the data or lack of data, there's not a concern that it is really being implemented well, Peter. Is that really what
you've got to be vigilant over it. You can't be a bit too carefree with that. But there's, even when you look at Advocacy's data, it supports the industry. So,
excellent.
18 months ago, I was doing a bit of a hunt for data out of Advocacy, seeing what the trends were looking like as far as complaints through ombudsman. And I got rather frustrated. I couldn't find the data I was after. So again, one of the benefits of being in the industry for so long, you get to know people. So I got onto the CEO, Dave Lock, to say, mate, I'm really getting over this. I'm trying to find the data. Can't get it out of the data cube. Help me out, or get somebody to send me the info. And they did. And the information
How did it look?
The reason why I couldn't find it, it didn't rank. Right. It is so small, it doesn't rank on their data sets.
So that is really good news then.
Exactly right. So it's something like 0.3% of all claims or complaints. It is very small. And then I found that the lovely person within AFCA that gave me the data, they actually did a cutback to FBAA members, which I wasn't expecting.
Right.
But FBAA members had less than half the amount of complaints. They dealt with them in half the amount of time. They really were shining in their obligations to the consumer, which was completely unexpected. I mean, I didn't go looking for that. But it was one of those nice little gems that comes out of the rough. You sort of go, well, that's not only is the industry doing the right thing. These things are really small. But it's really nice to see our members are really a cut above the mark.
Well, how does the FBAA get involved in the complaint side of the process, Peter? We sort of wondered about that because we always sort of advocated some of the mortgage brokers that we work with going, hey, look, obviously, as an example, I'm like, one of our customers was wanting an SMSF advice. And obviously, the mortgage broker sort of went to a little bit of a degree of providing an advice. And they're going, look, let's not do that. Let's not.
They don't give advice.
No, they don't.
Not unless you're licensed to.
Exactly. So we said, going, well, look, how about we take on that role and we'll help the customer out and we'll sort of help you transition that part of the advice. So it's interesting because we have seen previously some complaints at AFCA lodged around brokers giving inappropriate advice. So how do you guys sort of step in and
in those small cases that happens?
I just say I haven't come across one. So
that is good.
Yeah, but at the same token, so what we've done since I can remember, so going back to 2003, we always assisted from what is the IDR process step, the internal dispute resolution component of it, which by law is the first step. Brokers are meant to try and resolve the issues themselves before it goes to the ombudsman. Yeah, but you know what it's like. You're a one-man band. You're kind of biased in your thought processes there with your argument. The client says you're wrong. They go, no, I'm right. You're wrong. So we've always had a piece in there for an IDR model that comes through what we call our DRS, our disputes resolution schemes, which has always been run under the Australian standards. So if you're a one-man show and you're trying to argue against yourself and your client, it can come to us. Yeah. We will deal with it in the timeframes. We have an independent committee. We have an internal committee of peers and an independent component to that if we need to mediate outside of it. That makes an assessment. It's not a court of law, but it's helped to make a thought process and say, hey, look, you broker, you've got this wrong because of. Yeah. So if it goes further and it winds up with the ombudsman, you know what their fees are like, suggest you deal with it now. Or alternatively, no, we actually think that you're in the right. We make a determination from there. We also have a disciplinary tribunal that's governed by the ACCC, and that has much stronger teeth than what that first thing. But the IDR is all about trying to help them get through that first piece. If it winds up in the hands with the ombudsman, well, you know, the laws... or the rules, I should say, within AFCA have changed in the last 12 months or so. We help to lobby that position. So they get, I think it's 5 free complaints a year now, so long as they're in the right, so they don't get charged. Because a lot of people, you know what it's like, we're all human. You know, when things get tough, you throw mud against the wall, everybody's in your firing line. It's not necessarily a vindictive approach, it's just human nature.
This takes the heat out of it, doesn't it? Having that setup, right? That third party, and it's very structured, and there's time frames as well. And I think that takes the pressure out of a little bit. I might just switch it up a little bit. I'm really keen to get your thoughts on the finance broking industry, the rest of 2024. What are you seeing for the industry as far as the people who are running businesses and providing this advice to clients?
We're right at the beginning of 2024 at the moment, and everybody is as busy as.
Okay, excellent.
So the year ahead looks really full on.
So we're not coming out of a slow summer period, you're saying? It's hit the ground running. Is that right, Peter?
It's off out of the gates with a gun. It's... everybody is seriously busy. And look, that's, I guess, an extension from the time through the pandemic. Everybody was really busy through there. There's a fair bit of spinning wheels in the mud as well, unfortunately, as people were just trying to do something and couldn't get too far, but most did. So 2024 is actually looking to be a very, very exciting year in as far as the industry as a whole concerns. We know that there's not too many challenges from that regulatory front and that ombudsman front. Can't be complacent about that. We must be vigilant. We must ensure that we're doing the right things through our governances of our business and our care of our clients and our obligations under law. They are always, without question, things that cannot be mitigated and or shortcutted, whatever cases. And when you get busy, sometimes
there's pressure to go.
And sometimes there's unintentional mistakes as well.
Yes,
you're just going so hard to go, oh, damn it, I missed that.
Of course,
But we need to be very vigilant across that as the market goes forward. And it won't slow. And I've been saying this for the last 12 plus months. That come the second half of this year, we will see rates reduce. So I forecasted that rates would plateau in the first half of this year. Second half this year, whether it's the beginning or further out, and it's all subject to environments at the time, and as we're getting closer, we're seeing that solidify, rates will start to reduce. That will then reheat the market even more, right? It'll put more people back into the marketplace, will create greater competition, it'll push up property prices, and it'll be off and running again. And over the last 2.5 years, we've done that much research, plus knowing the pulse of the markets I have over 4.5 decades now. Up to the GFC, I could predict the booms and buffs in markets on the money. GFC sort of nailed that out a little bit.
You went,
A bit more erratic since then. But,
it's a reset.
a bit of reset to what?
Yeah, well, no,
I
exactly.
don't know where we're at.
Yeah.
But we've been
So you're positive.
bang on to what's happened
Yep.
from the last 2 years, so before rates started to increase again when we were in that dip.
Yep.
Even to the point where I had senior politicians of the day, not today, but of that day, say, why do you just scaremongering? No, and I proved them right. It was one scaremongering, I was right. This is what was happening, and it did. Because when you look at a long period of time, you can see that something is or isn't sustainable. Yeah, it's a very simple thing.
You've got more perspective and context from that longer view, right, Peter? Is that what you mean?
Yeah. And so you can just say, if you're on this unusual low, it can never stay there, especially on a global marketplace. It was subject to circumstances of the time, but not circumstances of norm.
Yeah.
Right. So it's always going to go up. Interest rates have to sit somewhere around that 6% mark as a standard variable rate for a home loan, whether it's 6.5 or somewhere in that 6% bracket is long-term sustainability of a solid marketplace without a lot of variation. Yep. And you've got to get that stableness in the marketplace, these dips and humps and so on. Always problematic to someone.
Yeah.
Right, whether it's the depositors that are missing out, so the mum dad investments or those retiring, living off their retirement funds, are getting next to no interest off it, or you're paying higher rates. The mortgage brokers are crying because the mortgage borrowers are crying because the rates are so high, repayments have gone up. But you got to get that stabilisation, because a 0.5% cash rate can never last.
No.
Just doesn't. Just
It
can't
was never
last.
sustainable.
So to live in that world and to, in my mind, wrongly stay in that world way too long.
It's folly.
It's false economy.
Yeah.
It's false
It is a
economy.
false economy.
Yeah.
For sure. What do you think of now? So somebody's going, I want to be a finance broker or a mortgage broker, starting out fresh. What are your thoughts on their starting out in 2024?
I think it's a great time.
Yeah.
Right. I mean, the market's hot.
Yeah.
So you can get in, be new at what you're doing, and start to get some runs on the portfolio. Get into the business quite well. You need for your first couple of years to have a mentor.
Yes, I was going to ask you about that.
Is very much so. You can't expect to jump into anything new and think you know it all day one. None of us do.
No,
right?
no.
So you need someone to guide that process. Now, it used to be written to law. It's not these days, but it is an obligation as to the way the legislation's framed, is that the licensee must ensure that their credit rep knows what they're doing, in my layman's terms.
Sure.
But basically, that's what it's like.
That's what it says.
That plays back to the mentor piece, and industries continue that since the 2010 era when the NCCP came in. So a couple of years with a mentor, hone your skills. I'm a big believer in starting off and formulating your foundations and making them solid before you try and build anything on top of it. And I don't care what it is. If the foundations are not solid, I don't care what you build on top of it. It's going to crumble. Ain't going to work, right? You're going to have Leaning Tower of Pizza. It's going to go like this. But it generally all crumbles. So, from our point of view, we say, well, Cert 4 is the minimum standard under law.
Okay.
Do it, get in there, spend a couple of years honing your skills, knowing what you're doing, and getting that base knowledge really solid. And enjoy what's in front of you and helping people fulfill their dreams. With all the stress and tensions that it comes. We spoke about mental health before. But that aside, it's very fulfilling and very rewarding from a career point of view. And from then on, build what you like. We look at the education piece. We know that somewhere around 83% of our members have done the diploma, a master's, a doctorate's degree in finance disciplines. People will learn because they want to. I don't believe in forced education in any form of academia. And you look at those sort of outcomes, forced educations have poor outcomes.
They do.
People don't want to do it. So a bit like when you get too busy, they look for every shortcut they can and do it in the shortest time frame.
Grudgingly doing it.
Grudgingly, short time frame. I've got to get this thing done out of my head. I'm going to take that shortcut. it's poor learning. So from an academia point of view, forcing someone to do something, especially in short timeframes, doesn't work.
But those stats really play out what you said, because and that's natural. It sounds like you're getting mentored, you're laying foundations, you're going, okay, now I want to know more about this. I'm choosing to add that qualification so that I'm getting better outcomes for clients. I'm enjoying the work. It's more complex, that kind of thing.
Yeah, it's a natural response.
Yeah.
Yeah. And also from an environment point of view, if it was me, I'd want to go into a meeting with clients, say, yes, and I hold this degree or that, or whatever, to say I'm better than the person you spoke to. I know what I'm talking about. So there's a little lever to pull there as well. But it does create a stronger set of knowledge to understand the impacts and dynamics of what you're dealing with.
Now, it sounds really good and very exciting as well. Can you pick out, and not to be negative, but some kinds of maybe challenges or things that you really think that you, and as an association, want to support, businesses in the coming months?
I guess from a broker business point of view, when you first get in, the big challenge is understanding the laws and your duty of obligation under legislation and the regulations you operate under. There is a lot. Right? Okay. We are known to be one of the most heavily regulated industries in the world. Yeah. And we probably are. Right? And I'm the chairman of what's called Global Board of Governors for International Mortgage Brokers Federation. It's a conglomerate of 6 countries around the world, and associations based. And we meet monthly, and I know what's happening around the world, and I understand what they go through. And one of the things is, yes, we are heavily regulated, but we deal with it in such a more proficient manner. It's quite uncanny. Those that have less seem to have more struggles. We have more, and we tend to handle it. We get through it okay. So that's a really good thing, but it's a lot to take on with all the beginning learnings of everything else you're doing. So they are the challenges about becoming a broker, but I find it great. There's a saying that if it was easy, everybody was doing it.
Correct.
Right? So I'm kind of glad it's not too easy.
It's not too easy.
And there's plenty of brokers in the market. For borrowers at the moment, and especially business borrowers at the moment, dealing with what was happening in the interest rate environment, but also the inflationary pressures that have been flowing through over the last year, couple of years, a year and a half, and now that's starting to come back a bit. The challenge in small business was managing their debt, wanting to grow and expand their businesses if the opportunity was there, but then looking at what things were being priced at one minute, then what they're being priced at the next. Even that comes down to the labour workforce.
Sure.
I know I was looking at building a house beginning of last year and wound up extinguishing it. The cost of labour and materials.
It's
ridiculous.
I build this house, I'll never get my money back.
No.
And that was a big problem in the construction industry and for people in those businesses, but it had the same effect basically in any industry in its own parallel and so on. So I think...
Are we coming out of that a bit more now?
Yeah, I think so. There's as inflation starts to pull back a bit, and that trend will continue as we get a flattening of interest rates in this environment, and then a reduction as we get to the end of the year. And we shall see that pull back. Whether some economists are saying there's 3 jumps in it, I think that's a bit bullish. There's probably 1 or 2 maybe. There's certainly 1 this year. You might get 2, depends when the first one happens and what the trends are. But once we sort of get a little bit of a drop back, and then create that new stable norm. You don't want to come back too far. If they come back too far, you start going back to what we went through 2 years ago, right? And everybody gets used to this unsustainable lower norm.
And it's very hard to operate as a consumer and as a business, isn't
it? And then it pushes inflation up and everything goes left of center again. Oh, here we go. So you need that stability. And then businesses through that stability will be able to grow. They can plan.
They can
they
plan.
Understand. They understand what's in front of them. And small businesses is the backbone of Australia. So we need to make sure that these things play out, right? Both from an industry and from a government and regulatory point of view, to make sure that there aren't any unnecessary tripwires in the sand for small businesses. There's every opportunity to grow and to expand because it's good for all of us.
Well, it is. It's from the consumer and it's the people who are running the small businesses.
But not only that, the challenges some of the mortgage brokers feel, because they're a small business themselves.
They are small businesses,
right.
And they've got massive cash flow issues. If you think about by the time they get paid, is so far apart by the time they do the deal and they get paid, 3 months later?
Yeah, 2 to 3 months out.
And cash flow is the thing for households
exactly.
and for small businesses, for any businesses, but particularly
But
small
luckily,
businesses.
as working as one part of the team, we've been able to help them. I'm like, us as advisors, we always go in there going, well, look, let's do financial planning firstly for yourself. Let's understand what your business needs.
Yeah.
What does it look like? What kind of business do you want to be? Do you want to be a lifestyle business? Do you want to be a business that wants to grow? And what are some of the parameters you can put in? And especially one of the businesses that we work with, we've gone, well, look, Joe, you've served about 100 of these customers. Now, there are so many ticket items that you left on the table, whether it's the asset finance, whether it's the financial planning, the superannuation, the insurance. These all could be your part of revenue buckets that you've completely missed out on. You could have had a JV and the customer would have had to get service in those areas, but we didn't do it. Now, that eliminated a bit of the cash flow once we sort of stepped in and gone, right now I'm providing services on financial planning, super, obviously financial planning we were helping them with, but asset finance and everything. Now, these all little pockets help with that cash flow piece.
Oh, no, for sure, for sure. Well, I think too, when working with, because financial planning businesses are very similar, Peter, as you would know, to finance broking, mortgage broking businesses, they're smaller businesses.
Yeah.
So really working together, not only for the end customer, but from business to business. You know what I mean? And
especially for the
growing that
brokers.
together.
I'm like, we are there to help our brokers and help them grow.
Of course.
I'm like, the other biggest part that we saw was the clawbacks. And, you know, they're working on
Don't get me on that one.
You
haven't got enough time for this conversation.
This will be a whole new podcast then as well. No.
But don't get me wrong, it's an important conversation.
It is an important
It's very important.
Because when you think about the drag to get paid, and then for 2 years somebody's got their hand in your pocket to take your money away from you that you did your job for. It's not like you didn't do your job. You actually did your job and it concluded. Yet somebody's got their hand in your pocket for 2 years. Now, no one says it shouldn't be there because there's a commercial balance as to why. But it has to be fair. And this is where I greatly appreciate the federal minister's position on this, is that everyone, including mortgage and finance brokers, need to be fairly remunerated. So the clawback conversation is far from over. More for another time, if you like. But I can tell you now, if you think of where I was last night, we're not done, right?
But it was one of the most frustrating issues, Pete, because we help some of these mortgage businesses and they always talk about this. So the ultimate framework that we had to work with was going, guys, as we're going to sort of work in, we're going to sort of create a bit of a efficient system where we're sort of serving the customers jointly between ourselves and financial planning. And we're doing a hand-holding piece with the customer because they've done that transaction. That customer next year will go, oh, I think my interest rates are too high. I'm going to get out of here. And you've got mortgage broker in the next suburbs going, well, I can get you a better rate. And they've completely lost that deal and got copped a clawback. So that's why we sort of intervene in the process now going, guys, let's just create a seamless experience for the client. Financial planning, mortgage broking together. What it does, if the customer's about to move out, we'll also know going, Mr. Client, why are you shopping around or what has happened? And it gives us time to give the feedback to the mortgage broker.
And they are symbiotic processes and steps in looking after the life cycle of a client. Right, you need that professional guidance, that advice, and you need someone to do the work, if you like, to see what's in the market. Because the market's always changing. I think it's always important too that cheapest isn't always best. Now, I've run private banking suites in my past, and we know exactly how that sphere works together with normal consumer land. But when you look at product, just because it's cheap doesn't necessarily meet your expectations and needs, or is the best in the market that is not unsuitable. I'll get my terminology right. not unsuitable for your needs. And it's an interesting balance and dynamic to work through, but I think that's half the fun somewhere.
Well, and I think that is really why people go to brokers, go to financial advisors, because there's so much information out there. I can look and find something cheap, but I don't know relative from a product perspective whether it's appropriate for me, how to exactly use that, or really that's not the right product for me as well. What we might do is just, if I could get some of your points, because you just came off that dinner last evening, what are some of the things that you feel with regards to your advocacy with the legislative changes? Anything that you're really working on to excite the industry, or that you're really digging into before we close off this lovely session?
So the key things we're working with the minister on is around clawbacks.
Right. Okay.
And
So
getting
these are
that
the
as a
clawbacks.
fair outcome. Right?
Good. Excellent.
So it's some people think, Pete, you're talking about getting rid of clawbacks altogether. No, I've never said that.
That's because that's
never
not
said it.
No.
It's about a fairness.
Exactly.
And
Okay.
whatever that looks like, I'm not prescribing that at this point in time. It's
Yep.
industry consultation to do that.
Good.
Payments of commissions from monies that are drawn out of offset accounts.
Okay.
Yeah, we
Yeah.
saw, I think it was about 12 or so months ago now, the research we did, there was a 342% increase of brokers not getting paid for 12 months.
Yeah.
Right.
If they got paid at all.
Yeah.
When the structure came out of an offset account, and that's just not fair.
No, that's not equitable either.
And
no.
there's other issues that float around the marketplace. There's some stuff that's with ASIC. I wish it wasn't, but in regards to the way the best interest duty rolled out under RG 273 and bundled home loans,
Yep.
they're applying the best interest duty to every product in the bundle. That's where ASIC landed.
Yeah.
Treasury, when they wrote the legislation, and we were there with them in Parliament House, and so was ASIC. The Treasury's intent of the law was he applied the best interest duty to the predominant debt in the bundle,
Right.
which 99.99% of the time is going to be the home loan.
It's the home loan usually, yeah.
If you've got a
Yep.
$100,000 credit card limit at $10,000 home loan, I'll be scratching my head. But
Yeah.
it'll be the credit card.
Sure.
But there's a few bits and pieces like that
That need to be
that we're
worked
still
on.
working on.
Yep.
And they are probably some of the key hot points. There's a whole host of things happening in the digital environment at the moment.
I was going to ask you about that.
So we've been working with Treasury around digital discharge forms.
Right.
So one of the big pain points for brokers, you're going to a settlement, you've organised a loan,
Yeah.
you've spoken to the existing lender, they've come up with a rate, you've looked in the marketplace doing your best duty.
You're
interest,
doing your job,
and
yep.
you find out that there's a better deal here. You put it
Yeah.
together, customer says good to go.
Yeah.
They're 24 hours out from settlement. Then the lender that they're discharging comes out with a deal that they were never prepared to do before. Cheap rates, huge money, cash in the bank sort of stuff. And they pull it out from your feet 24 hours out. Now, that's
Yeah.
really wrong.
Well,
Right? I don't
Yeah.
care how you cut it.
It
It's, to
is.
me, I'm on record publicly, so I'll say it here, it's a dirty, grubby little tactic in my hand.
Sure.
And we're dealing with Treasury to bring an end to that.
Okay. Excellent.
And it should be that when a broker or anyone goes, or the customer themselves goes back to their existing lender, put your best deal on the table.
Forward.
Agree.
Yes.
Everybody put your best deal on the table. That's what it is. There's no second bite of the apple.
Yeah.
Then you can make an informed decision and not
Yeah.
in a context where there's panic,
Yeah.
No.
there's stress,
Calm.
errors happen.
Yeah.
Yeah.
You need
and
a
it's good.
calm, sensible environment, done the due diligence,
Yeah.
done the math. This is where it lands. And so be it. Because the reality at the end of the day, it's a big pond. There's not a lot of players, but it's a big pond. So what you lose there, you're going to pick up from somebody else.
Yeah.
Right? It's not like you're going to lose out your market
No.
share on it.
No.
All you do is create a bad name for yourself, saying that you're prepared to do these grubby little deals at the last minute. Because you got a customer, of course, who 24 hours has a different expectation as to what's going to happen.
I was
so
going to
they're
say,
not happy.
Yeah,
No,
as an end
Yeah.
consumer, you don't expect that experience
No.
because
Come out of left field.
it's stressful enough. Well, I've got to say, for this conversation, I think that probably brokers, I've got a greater understanding. Having that advocacy of yourself and the
Yep.
association is obviously very, very crucial. So this has been very enlightening. Thank you very much, Peter.
Thank you.
Really appreciate it.
Appreciate it, Tamara. Thanks,
Thank you,
everybody.
Peter.
Okay.
Thank you, Peter.
Thanks, Jens.